What's your ideal portfolio mix?
So once again, I'm one of these rare property people who doesn't just believe in investing in property, right?
Right.
So I look at, an ideal portfolio mix has your own home in there,
Mm-hmm.
and maybe you've got 2 or maybe 3 investment properties. And if you have 3, don't compromise on the quality of any of those so that you can have more. It's about quality. And if you can only have one, have one. It's better than having 2 B grade. If you could have 1 A grade, it's better than having 2 Bs or 3 Cs. Um, so your home plus a couple of residential investments, if income cash flow will allow. Also, you want to have, I think, shares in some form or other. Right. So I think it's important to look at other investment classes. I think also potential your superannuation. That's obviously and maximizing, the opportunities with superannuation, and looking at some alternative investments as well. It's a bit like I mentioned with the venture capital fund that I've had invested in. That's an alternative investment. So looking at that's a holistic portfolio mix. It isn't purely reliant on property because property is a lumpy investment. So you sort of do need to diversify.
I really like that you suggesting that people have shares and property, because I think there's a lot of buyer's agency or some advisors out there that just want to help themselves to a certain degree, see how much the property's gone up and try and access that equity and go into the next one, not giving financial advice to not that, I don't know, you guys aren't actually licensed financial advisors as buyer's agency, are you? But
I didn't mention financial planners, but I should have added that into the holistic mix. You need to get appropriate advice, particularly with superannuation, from appropriately qualified people. And we're not financial planners, but what we will do is say, you know what, you need a whole plan, not just a property plan, and you need to work with advisors that respect property and how property fits in with the whole picture. But absolutely, we'll recommend that people would go down that path of getting that advice.
It definitely should be a bit of a mix, and I would actually say rebalanced if you can, every 2 or 3 years, because asset class go up in different years and periods. And if one asset class has risen so much, it started at 50, it's gone up to 80, maybe it's time to rebalance that portfolio.
Well, the problem is with property, it's really impossible to have a balanced.
Depends how many you got.
Yeah, well, even with 1 or 2, if in Sydney, for argument's sake, you got a couple of properties in Sydney. My total investment portfolio is completely and utterly unbalanced because the properties just far outweigh. I can leverage to get into property that I haven't done to buy shares. So I know you can, but I haven't. I figure I've got enough borrowing in property, but some people would. But even if you did borrow to get into shares, for example, you're never going to borrow the same proportion.
No.
So therefore, it's quite difficult to have a balanced portfolio the minute you have property. So my big thing there is you need to really focus on your property investment assets need to be bloody good, because there's opportunity cost in terms of having a balanced portfolio. You can't have it. So therefore, you want to make sure it's as good as you could possibly get it.
I've had a lot of experience in borrowing money, borrowing shares, leveraging into shares, and it didn't work out well twice. I lost. It can be the problem with borrowing money for shares is that margin calls, right? Yeah. And the problem with borrowing that is what happens is you might have some good stocks, but when the market goes down 20 or 30%, and that might be your equity, you start chasing your tail, and people are just making crazy decisions. Whereas in property, it doesn't occur like that. And so what you end up is getting squeezed, right, down to you either got to come up with a lot of money to put it in to stabilize it, or you got to sell stocks. And I made a decision twice to not put any more money in. I had enough in, and I just had to sell the stocks, and then ended up with nothing. Luckily, I never collateralized my properties with my shares. That would have been a huge mistake. So,
do you own an investment property? Washington Brown has helped over 250,000 property investors pay less tax with the depreciation schedule. Visit washingtonbrown.com.au to pay less tax today.